Hello and welcome back. Today we're taking a closer look at something that has quietly started gaining attention again across the global currency community, especially among people who follow developments surrounding Iraq's financial system and the future of the Iraqi dinar. Over the past several days, conversations about the dinar have started heating up again online. Investors, analysts, and longtime currency watchers are once again asking the same question that has circulated for years. Could Iraq's currency eventually become significantly stronger? But before we jump into speculation, it's important to slow down and focus on what is actually happening inside Iraq right now, because the real developments are more subtle, more technical, and in many ways far more important than the rumors that tend to spread across the internet. At this moment, Iraq's banking sector is going through a period of quiet but meaningful reform. These are not the type of changes that create dramatic headlines overnight, but they are exactly the type of structural adjustments that economists often watch closely when evaluating the future direction of a country's currency. Over the last year, the Central Bank of Iraq has increased supervision over commercial banks, particularly when it comes to foreign currency transactions, international transfers, and access to the US dollar. These measures are part of a broader effort to modernize Iraq's financial system and bring it closer to international compliance standards. For many years, Iraq's banking system struggled with outdated technology, heavy reliance on physical cash, and weak integration with global financial networks. Those limitations created significant challenges for economic transparency and made it harder for Iraqi banks to operate smoothly with international partners. Because of that history, financial authorities inside Iraq have been working steadily to rebuild confidence in the country's banking infrastructure. And now we are beginning to see signs that those reforms are slowly taking shape. Banks across the country are being required to follow stricter compliance rules. Currency transfers are being monitored more carefully. Digital platforms have been introduced to track transactions and improve transparency in the foreign exchange market. At first glance, these changes may sound technical or administrative, but in reality, they represent a critical foundation for long-term economic stability. A national currency does not become stronger simply because people hope it will. Currencies gain strength when global markets trust the financial system behind them. That trust comes from transparency, strong regulation, reliable institutions, and stable economic policies. And that is exactly the direction Iraq appears to be moving toward right now. Currently, the official exchange rate for the Iraqi dinar remains around 1,300 dinars per US dollar. This rate is used for government budgeting and official financial transactions, and the central bank has maintained this level in order to stabilize the economy and control inflation. In Iraq's parallel or street market, the dollar sometimes trades at a slightly higher price depending on supply and demand. Authorities have been working to narrow that gap by increasing access to dollars through official banking channels and improving the regulation of currency exchanges. So despite the rumors that often circulate online about sudden revaluations or dramatic overnight changes, there has been no official announcement indicating that the Iraqi dinar is about to jump to a dramatically higher value. However, that does not mean nothing important is happening. In fact, the reforms currently taking place inside Iraq's financial system may be some of the most significant steps the country has taken in years toward rebuilding economic stability. To understand why these reforms matter, it helps to look at Iraq's recent economic history. Over the past several decades, Iraq's economy has faced enormous challenges. Wars, international sanctions, political instability, and infrastructure damage all played major roles in weakening the country's financial institutions. During those difficult years, Iraq's currency lost much of its value and the banking system became heavily dependent on cash transactions. Modern financial services struggled to develop, and international financial relationships were limited. Rebuilding a system like that takes time. It cannot happen overnight. But over the last several years, Iraqi officials have begun implementing policies aimed at gradually modernizing the country's financial sector. These policies include strengthening banking oversight, introducing digital payment systems, improving anti-money laundering regulations, and reconnecting Iraqi banks with global financial networks. These steps may not immediately change the exchange rate of the dinar, but they are essential for creating the conditions that support a stronger and more stable currency over the long term. Another key factor supporting Iraq's economic recovery is the country's oil sector. Iraq remains one of the world's major oil producers, exporting millions of barrels of crude oil each day. Those exports generate billions of dollars in revenue that flow into the national budget. Oil income continues to serve as the backbone of Iraq's government finances. It funds public salaries, infrastructure development, and reconstruction projects across the country. While reliance on oil does present risks if global energy prices fluctuate, the strong revenue generated by oil exports has helped Iraq maintain financial stability in recent years. At the same time, Iraqi leaders have been discussing long-term plans to diversify the economy beyond oil. Investments in electricity infrastructure, transportation networks, and regional trade corridors are gradually expanding. These projects are intended to create new economic opportunities and reduce the country's dependence on a single industry. Another important development involves the expansion of digital financial services. For decades, many everyday transactions in Iraq were conducted using physical cash. That made it difficult for financial authorities to monitor economic activity and limited the growth of modern banking services. Today, however, electronic payment systems are beginning to expand across major cities. Debit cards, mobile payment platforms, and digital banking services are slowly becoming more common. This transition toward electronic transactions is significant because modern economies rely heavily on digital financial systems that allow transactions to be tracked, regulated, and integrated into the global banking network. When international investors see a country strengthening transparency and financial accountability, confidence in that country's economic system tends to grow. That confidence can eventually influence currency stability. In addition to domestic reforms, Iraqi banks have also been working to rebuild relationships with international financial institutions. After years of limited access to global markets, Iraqi banks are gradually reconnecting with foreign partners. This allows Iraqi businesses to participate more easily in international trade and helps integrate the country into the broader global financial system. As these connections grow stronger, Iraq's economy becomes less isolated and more aligned with international financial standards. But while these reforms are encouraging, it's important to remember that economic progress usually happens in stages. First comes financial reform, then increased investor confidence, then gradual economic expansion. And only after those foundations are firmly in place might a national currency experience long-term appreciation. Right now, Iraq appears to be somewhere in the early to middle stages of that process. Banking oversight is improving. Financial transparency is increasing. Government revenues remain strong due to oil exports. But challenges still remain. Political stability continues to play a major role in economic development. Infrastructure rebuilding must continue, and the financial system still requires further modernization before it can fully match the efficiency seen in advanced economies. Another topic that often generates discussion within the dinar community involves the difference between official exchange rates and parallel market rates. When a country has a gap between the official rate and the street rate, it can create distortions in the economy. Businesses may prefer using informal markets, and it becomes more difficult for financial authorities to control currency flows. Iraq's central bank has been working to reduce this gap by improving access to dollars through regulated banking channels and strengthening oversight of currency exchange operations. The goal is to bring more transactions back into the official financial system where they can be properly monitored and regulated. Some analysts believe that narrowing the difference between official and unofficial exchange rates is an important step toward building a more stable currency environment. At the same time, discussions continue online among currency enthusiasts about the possibility of future monetary reforms, including the long-talked-about Delete the Zeros project that has occasionally been mentioned by Iraqi officials in past years. This concept generally refers to a redenomination process designed to simplify large currency denominations within the domestic economy. If implemented in the future, such reforms would likely be part of a broader monetary restructuring rather than a sudden dramatic increase in currency value. For now, however, Iraqi authorities remain focused primarily on stabilizing the existing financial system and improving economic fundamentals. From time to time, various commentators and online personalities share their opinions or predictions about potential timelines for currency changes or major financial announcements. These discussions often attract attention within the dinar investment community. But it is important to remember that many of these predictions are speculative and are not confirmed by official government or central bank statements. Financial policy decisions, especially those involving national currencies, are typically made through formal processes and announced through official channels when they occur. For that reason, most economists and financial analysts prefer to watch measurable indicators such as banking reforms, fiscal policy changes, and economic growth trends rather than relying on unverified predictions. And those indicators inside Iraq are gradually moving in a direction that suggests slow but steady progress. The modernization of Iraq's banking system, the strengthening of financial regulations, and the continued flow of oil revenue into the national economy all represent important building blocks for long-term economic stability. Whether those developments eventually lead to a stronger Iraqi dinar in the future remains a subject of ongoing debate. What is clear, however, is that meaningful reforms are taking place behind the scenes. They may not produce dramatic overnight changes, but they are laying the groundwork for a more transparent and stable financial system. For investors and observers watching Iraq's currency from around the world, the most valuable insights often come not from rumors, but from the gradual economic improvements that unfold over time. As Iraq continues modernizing its banking sector and strengthening its financial institutions, the global community will be watching closely to see how those reforms influence the country's economic future. And as always, it is important to remember that discussions about currencies and financial markets involve uncertainty. This report is intended for informational and educational purposes only, and viewers should always conduct their own research and consider multiple sources before making any financial decisions.